Hey guys, welcome to TradersMastering. In this video, I'm going to show you one of the most ultimate ICT Charter Price Model strategy, which you can use to day trade from the beginning of the year. This strategy is very simple. All you have to do is to follow the time of the day. After following the time of the day, you follow your market structure. After following your market structure, you look for reaccumulation entry, which is entry from continuation. And you also have the number 3 entry using short-term market structure change. What am I saying? The first thing I talk about in this ultimate strategy is the time of the day. If you are trading, you need to know what time of the day you are going to be trading. What time of the day you are going to be trading. The time of the day you are going to be trading is going to be New York session. When starting that, I will advise you to trade only the New York session, because the New York session is going to help you a lot. Why? Because the London session is very volatile. Why did I say so like that? The London session is very volatile. In the market, most of the trends that come before the New York open, which is the New York open, can be either force or continuation from the New York session. Do you understand me? Most of the trends that come before the New York open can be either force or continuation. There are so many ways most people identify their force signal, which I'm going to talk about in this video. So the time of the day is you enter during 7 a.m. to 11 a.m. in the New York open. Most of you may be not aware of the time session that most people trade. You trade either the London, the New York session, or even the Asia session. But normally I trade only the New York session. Why? Because the New York session is one of the most profitable session which you can use for day trading or even scalping. So let's dive into the market structure. When we are talking about market structure, we are talking about short-term structure. This short-term structure can be either from the London low, for example, or the Asia low. But in the ICT Charter Price Model, it just buying from London low continuation, no other. London low continuation. All you have to do is for you to wait for when price makes a low in the London session and breaks the high of the Asia session, which is this one. This using this diagram as a reference, it breaks this Asian high. After breaking the Asian high, you notice the London during the New York session in the 7 a.m. you wait for price, which is I'm talking about the market structure now. Sorry. Once price break London break the market structure, break the Asia high when going bullish, price continue to move higher. So that is it. All you have to do in the market structure is to find when London creates a low during the day and enter when the New York is retracing to the London low, which is in the bullish direction. Same thing also happen in the short scenario when selling. So that is it. There are two patterns identified in this market structure, which is the 15 minutes 1 hour short-term strategy. So this, once price creates a low in the London session, all you have to do is to wait for the New York session to open and wait for price to retrace into the London, and you buy from when it's bullish. And sometimes in this diagram, there are two diagrams here. The first one was that during the Asia session, if you notice that price was being bullish, I'm going to give you the example. On the price was being bullish, immediately price was bullish. During the London take out the Asia low, which was this, and it creates expansion move up. This happened under the 1 hour short term highs and lows, or 15-inch highs and lows. So in the New York session, you wait for retracement. In this scenario, in this first scenario, the Asia creates the low of the day, while in the second scenario, the London creates the low of the day. For example, your entry from the continuation of the trade. So now let's dive into our number 3, reaccumulation entry. The reaccumulation entry normally entails in what way you are going to buy from. Normally, most people buy from order block, which are which the ICT model we buy from order block, which we are using. So this we are buying from the London low. This is the London low. We are buying from the London low. Also, same thing also apply. We are also buying from the London low also, which is this. We are buying from the London low. So that is the reaccumulation entry. This in the bullish scenario, this London low will act as a support when the price is bullish, and when the price is bearish, the London high will act as a resistance for the New York continuation to move lower. So also it is this ICT Charter Price Model is just based on continuation of the New York session. That is what the ICT Charter Model entails. This is the holy grail. Is it not holy grail? Sometimes it is continuation, and it's very simple. You wake up in the morning, wait for the New York session to open, and wait for price to retrace into the London low when the price is bullish. You take your shot. That is it. You take your shot. That is it. So number 4, enter on the 3 to 5 minute short term market structure. What am I saying? If price moves higher and retraces into the London low, what are you going to do? You wait for market structure shift on the 3 minutes or the 5 minute short term, which is the MSS change, market structure change of trend. So this is very simple. This low can be either 1 hour short term, or it can be either 15 minute short term. It all depends, but you can decide to trade any one of it. You can decide to test the 1 hour short term in the London session, because why am I saying this is that most of the time when trend is moving in a speed, you will notice that the 15 minute short term will be visible. But when price is moving in a nice and fashion way, you will notice that the 1 hour short term will be visible. It just depends on what short term highs and lows you are going to use. In the number 4 entry, I already said that you use your 3 minute. Imagine price is into this 1 hour short term. All you have to do is for you to look for when price creates a lower low in the short term of the 5 minutes, and you wait for price to break the short term. Just retrace, enter from the short term highs, and you see a massive explosion to the upside. That is it. You wait for market structure change of trend. Now let's dive on into our example. If you notice, this example I'm giving to you is starting of the new year. The trend was bullish, which I know the trend was bullish on January 9. Which was bullish. All you have to do is for you to wait for market structure to create a trend, like I said, in the London session, to create a trend, a short term. If you notice, this was a short term low. This was a short term low in the London session. So in the New York session, we have to wait for price to create a retracement. This was a retracement from the New York session. Price retracing to the London low. All you have to do is for you to look for an entry on the 5 minute time frame or the 3 minute time frame. Depends on what strategy, on what time frame they are going to be using. You can either use 3 minutes or you can use 5 minutes. It depends on If you are looking for this kind of entry, you go to your 3 minutes time frame to change of trend before entry. If you notice that maybe the trend is slow, you can use the 5 minutes time frame to confirm if the trend is going to be a re-move to the upside in this example. So let's dive on into let's use the 5 minute time frame. If you notice this is the 5 minute chart from the previous markup. This 5 minute chart, if you notice, market structure has already changed on the 5 minute time frame, which you may say no, you may say it's not. For me, it's a market structure change. If you want to really know what is going on behind the scene, market structure has already changed in this time frame. All you have to do is for you to confirm if truly the market structure has already changed. You have to go to your 3 minute time frame. So this is the 3 minute time frame. The 3 minute time frame is already changed. Market structure has already changed in this 3 minute time frame. Why? Because it took out the body. There was a rejection. Definitely there was a move here. So for me, this is an opportunity for me to enter on the trade. However, this trade, I took this trade. That is the reason why I'm showing you. This is one of the most profitable trading strategy. You buy from and you target 3 to 1. This was the trade I took. This was on the 10th of January. I took this trade. This was on the 10th of January. You buy. There was a buy. You buy from this place. There was a move upward higher. There was a move, explosion move. Look at how the candle it is. So that is for this this pattern. If you notice, this pattern was the second pattern I described. Either the Asia created the low of the day, or the London created the low of the day in this scenario. So that is the first. This is our second example. If you notice, this there was price fluctuating. This was the opposite of what I said earlier. This was the opposite of what I said earlier in the Asia session. If you notice that Asia creates the low of the day, but in that scenario, Asia creates the high of the day. And immediately the London create expansion, the New York open to retrace, like I said in this strategy. It's very simple and clear. So when price retrace into this area, when price retrace into this London high, you say in this scenario. Why? Because the trend was bearish. How do I know if this trend was bearish? Because there was a market structure change from the higher time frame, which I'm going to talk about in most of my upcoming video. What time frame will you be looking for when trading? So let's dive on into what I'm saying. When price retrace, when New York session open around this place, New York session open 7 a.m. in the morning, immediately price was retracing into this London high, which is the London order block, if you may say. I normally say London high because this is the eye of the London. This is the eye. Look at it. This is the eye of the London. So price retracing into the London eye. What happened? All you have to do is to go to either your 3 minute time frame or your 5 minute time. Notice our market create. You will notice our market create explosive move to the downside after the previous day. Let's go to our 5 minute time frame and see what happened in our 5 minute time frame. If you notice, when price creates in our London high on the 5 minute time frame, you notice that price market structure change here. There was a change in trend. Most people enter in this trade by selling shorts. You notice that when price creates a market structure change, people entry inside the breaker block or the FVG. It just depends on what strategy what time frame you are going to use. This is one of the trading strategy used by the ICT, which is the Charter. This is one of the best ICT strategy, which is called Charter Price Model. This Charter Price Model is one of the most powerful trading strategy. I have taught you everything I know about it, and there is always a deeper side to it. I've given you my deeper side to it. There are still a lot of things I should have said, but because of the video, I'm not going to say a lot. This is one of the profitable trading strategy you can use for day trading in 2024. The ICT Charter Price Model is just based on the New York session, the New York Open. The New York Open. That is what you buy. You buy when it's bullish. When it's bearish, that is when you sell. At the New York Open, you only work with the New York Open. You don't work with the London. That is it. That is the end of this video. If you really love this video, you enjoyed watching this video, please, I want you to subscribe to this channel. Subscribe to Traders Mastery. I see you other time. God bless.